The UK housing market has stopped. Not crashed, not boomed, just stopped. October 2025 has seen something most experts didn't predict. A complete that's left buyers hesitating, sellers panicking, and estate agents wondering what just happened. Transactions that should be sailing through are stalling. Viewings that should be converting into offers are going nowhere. And properties that would normally sell in weeks are sitting for months. This isn't your typical autumn slowdown. This is something different, something driven by fear, speculation, and a single date that's got everyone holding their breath. November 26th, 2025, the day Rachel Reeves delivers her autumn budget. The day that could reshape UK property forever. If you want to stay ahead of every twist and turn in the UK property market, make sure you hit that like button and subscribe to Property Reporter. We bring you the latest housing news, market analysis, and the insights you need to make smart decisions in this crazy market. Don't get left behind when the budget drops. Let's talk numbers, because they tell a story that's almost hard. Buyer demand has collapsed by 8% compared to this time last year. Sales agreed are down 3%. For the first time in 2 years, we're seeing an annual decline in people actually committing to property purchases. The average asking price crept up by just 0.3% in October. To put that in perspective, the 10-year average for October is 1.1%. We're looking at the weakest October price growth in over a decade. And here's where it gets interesting. Last October, the market was buzzing. People were rushing to complete purchases before the April stamp duty changes kicked in. Mortgage rates had just started dropping after that first base rate cut in 4 years. Confidence was building. Now, silence. The energy has been sucked out of the room, but the economy, mortgage rates are actually better than they were last year. Employment is stable, wages are growing. So what's changed? Why has the market essentially pressed pause? The answer is sitting in Westminster, being drafted behind closed doors right now. Everyone's afraid of what's coming on November 26th. The autumn budget has become the ghost haunting every property decision in the UK right now. And it's not just vague worry. There are specific, detailed proposals floating around that have got buyers and sellers genuinely spooked. The Treasury has been considering a radical overhaul of how we tax property in this country. We're talking about potentially scrapping stamp duty entirely and replacing it with something completely different. One proposal suggests an annual property tax on homes worth over £500,000. Not a one-time payment when you buy, an annual bill, every single year. Discussed is around 0.54% for properties between £500,000 and £1 million, and higher for anything above that. Imagine owning a £700,000 home and suddenly facing a £3,000 annual tax bill that wasn't there before. Then there's the landlord situation. Reports emerged that the Treasury is considering charging national insurance on rental income. Currently, landlords pay income tax on their profits, but no NI. An 8% levy could raise up to £3 billion. For a landlord earning £60,000 in rental income, that's an extra £5,000 a year in tax, just gone, overnight. There's also been talk of introducing capital gains tax on primary residences worth over £1.5 million. Right now, your main home is protected from CGT. That's been a fundamental principle of UK. If that changes, it would represent a seismic shift in how we think about home ownership. And don't forget about council tax. The current system is based on property valuations from 1991, 34 years ago. There's speculation about new bands being added at the top end, or even a complete replacement with a modern system that reflects actual current values. Any of these changes alone would be significant. All of them together, it could rewrite the entire UK property landscape. And the problem is, nobody knows which ones are actually happening until the Chancellor stands up and announces them. The fear isn't hitting everywhere equally. It's absolutely hammering the top end of the market. Properties worth over £1 million have seen buyer demand drop by 11%. Homes between £500,000 and £1 million are down 4%. Small numbers. These are the buyers with the most to lose from potential tax changes. They're the ones sitting on their hands, waiting to see what happens. London is getting destroyed. Prices in the capital are down 1.4% annually. The southeast is struggling too. These are areas where £500,000 doesn't buy you a mansion. It might get you a decent 3-bedroom semi. So when buyers hear about thresholds at $500,000, they're not thinking about millionaires. They're thinking about themselves. Compare that to the north. The northeast is seeing price growth of over 9%. Yorkshire is up nearly 4%. Scotland and Wales are both comfortably above 2% growth. Why? Because properties there are cheaper. Threshold of £500,000 doesn't scare someone buying a £200,000 house in Newcastle. It terrifies someone stretching to £600,000 in Surrey. We're watching the UK housing market split in two right before our eyes. One half moving forward, one half frozen solid. And the dividing line is whether you're above or below the rumoured tax thresholds. Here's what's really wild about this situation. The market has more properties available right now than at any point in the last decade. Sellers are listing, supply is there, but buyers aren't biting. Normally, high supply means prices fall until they reach a level where buyers step in. That's basic economics. But right now, buyers aren't responding to price cuts. They're not responding to better mortgage rates. They're not responding to anything except the calendar. They're waiting for November 26th. And that waiting is costing people real money. Rightmove data shows that properties receiving an inquiry on their first day of being listed are more likely to find a buyer than homes that take over 2 weeks to get that first inquiry. In a normal market, that makes sense. Fresh listings get attention. But in this frozen market, even well-priced properties are sitting longer because buyers are simply not looking. Estate agents are reporting viewings happening with no follow-up, offers being made and then withdrawn days later. Buyers getting cold feet not because of the property, but because of the budget. Sellers who need to move are stuck in limbo. They can't price low enough to overcome the fear factor. And they can't wait forever because life doesn't stop for government budgets. Divorces happen, job relocations happen, downsizing happens, people need to sell. But the market isn't cooperating. We're in this bizarre standoff where everyone's holding their breath and nobody wants to be the first to blink. What if you buy now and the budget introduces massive new taxes? You've just overpaid. What if you sell now and the budget changes nothing? You've just given up negotiating power for no reason. Paralysis breeds paralysis. And right now, the UK housing market is completely paralysed. So what could actually happen on November 26th? Let's break down the real proposals that are being discussed in detail, not just speculation. The stamp duty replacement is probably the most serious. The current system charges buyers a one-time tax when they purchase. It's expensive, it's lumpy, and economists have hated it for years because it discourages people from moving. The Institute for Fiscal Studies has called it economic nonsense. The proposed alternative would shift the burden from buyers to sellers and make it an annual charge. Properties over $500,000 0.54% of their value every year after sale. Properties over $1 million would pay a higher rate. The theory is this would remove the barrier to moving while still raising revenue. The reality is it would fundamentally change the economics of home ownership for millions of people. Then there's the national insurance on rental income proposal. Currently, if you earn money from renting out property, you pay income tax on the profits, but you're exempt from NI because it's considered investment income, not earned income. The government is reportedly considering applying an 8% levy, the same rate employees pay, to rental profits. This would raise somewhere between £2 and £3 billion. For landlords, it would slash returns. Many are already facing higher mortgage rates, stricter regulations, tax relief on mortgage interest. Another big hit could push thousands out of the sector. And when landlords exit, they sell to owner-occupiers or other landlords. Either way, rental supply tightens and rents go up, so tenants end up paying for it. Capital gains tax on primary residences is the nuclear option. Your main home has always been CGT-free. It's one of the sacred cows of British property. But with the government desperate for revenue, some reports suggest they're looking at applying CGT to gains on homes worth over 1.5 million. This would overwhelmingly hit London and the South East, where modest family homes can easily exceed that threshold, and it would break a decades-old assumption that your home is your tax-free castle. Council tax reform is the least sexy but potentially most widespread. The current system is insane. Your tax bill is based on what your property was worth in 1991. A flat that was worth $60,000 then might be worth $400,000 now. A house worth $200,000 then might be $2 million now. But both are still in the same rough tax bands. New bands at the top, or a complete revaluation, could shift billions in tax from poorer households to wealthier ones. Which sounds fair until you realise wealthier households vote more, donate more to political parties, and make more noise. Any of these happening alone would be big news. Multiple happening together would be historic. And the Treasury is apparently considering all of them. The irony of this entire situation is that doing nothing has become the most expensive option for many people. If you're a seller who needs to move, every week you wait is a week of mortgage payments, bills and stress. Property sitting on the market for 3 months costs you thousands in holding costs. Council tax doesn't stop. Building insurance doesn't pause. Energy bills for an empty property that needs to be heated for viewings keep coming. And if you're in a chain, you're holding up other people too, which means solicitors are circling. Estate agents are getting frustrated, and everyone's patience is wearing thin. The pressure is immense. If you're a buyer who's found the right place, hesitating could mean someone else with more courage swoops in. Or it could mean the seller pulls out of their own purchase chain because they're tired of waiting. There are stories emerging of buyers who had offers accepted in September, went through the survey process, got their mortgage offer, and then just stopped. Cold feet. Not because anything was wrong with the property, not because the survey revealed problems, just because the budget was coming and they wanted to wait. Now those sellers are back to square one. Property back on the market. Money spent on legal fees for nothing. The decade-high supply of properties means sellers have no pricing power. Buyers can negotiate hard right now, really hard. In a normal autumn market, sellers might expect to achieve within 5% of asking price. Right now, 10 to 15% under asking is becoming common for properties that have been sitting for a while. Buyers can make cheeky offers, and sellers are actually considering them because they know the alternative is sitting empty for months. But they're not, because they're scared. The rational move for a buyer right now is to lowball everything, knowing sellers are desperate. But buyers aren't being rational. They're being emotional. They're reading headlines about potential tax changes and thinking, what if I buy now, everything changes and I've made a terrible mistake? Fear is expensive. It costs both sides money. Meanwhile, interest rates aren't guaranteed to stay low. Mortgage rates have been gradually creeping up again as lenders wait to see what the Bank of England does next. The base rate is currently at 4%. Another cut is expected eventually, but the timing is uncertain. The bank's Monetary Policy Committee is caught between persistent inflation that won't quite die and an economy that needs stimulus. They're moving cautiously, very cautiously. Some economists predicted rates would be down to 3.5% by now. That hasn't happened. If you lock in a rate now and rates drop after the budget, you lose. If you wait and rates go up, you lose. And most mortgage offers are only valid for 6 months. So if you got an offer in September to beat the budget uncertainty, that offer expires in March. If your purchase hasn't completed by then, at whatever rate exists then. It's a timing nightmare. The first-time buyer situation is particularly brutal. Many have been saving for years, finally have a deposit together, and now they're facing a market where sellers are desperate but won't drop prices enough because they're convinced the budget might change everything. First-time buyers already get better stamp duty treatment than existing homeowners. They pay nothing on the first £300,000, so the proposed changes to stamp duty might actually benefit them. But they don't know that for sure. And the uncertainty is paralysing them just like everyone else. So first-time buyers are stuck overpaying for properties in a frozen market, or waiting and risking being priced out if the budget fears turn out to be overblown and demand comes flooding back. Some are waiting until November 27th, the day after the budget, to start house hunting, assuming they'll have perfect clarity and can move fast. But they're not the only ones with that plan. If the budget turns out to be a nothing burger, you could see thousands of first-time buyers flood back into the market simultaneously. Demand surge, prices jump, and suddenly the properties they were looking at in October are out of reach. For landlords, the calculation is even more complex. If national insurance on rental income becomes reality, the returns on property investment drop dramatically. Let's do the math on a typical scenario. Say you own a property worth £400,000 with a £200,000 mortgage at 5%. Your annual mortgage interest is £10,000. Income is £24,000 a year. After mortgage interest, maintenance, insurance, and letting agent fees, you might clear £6,000 in profit. You pay income tax on that. If you're a higher rate taxpayer, that's 40%. So you're down to £3,600 actual cash profit. Now add an 8% national insurance charge on the £24,000 rental income. That's another £1,920. Your £3,600 profit just became £1,680, more than halved, and that's before considering void periods, problem tenants, or major repairs. Some landlords are looking at those numbers and thinking it's not worth it anymore. They're preemptively selling up. But if they sell now and the NI change doesn't happen, they've exited a good investment for no reason. If they wait and it does happen, they're stuck with assets that are less profitable and potentially harder to sell because other landlords will. The landlord exodus has been happening slowly for years. Every tax change, every regulatory burden pushes more out. This could be the final straw for thousands. And when landlords sell, they usually sell to owner-occupiers, not other landlords. So rental stock decreases, supply and demand dynamics shift, rents go up, tenants suffer. The whole system groans under the pressure. Nobody wins in this environment, everyone's losing something, even if it's just time and opportunity. Estate agents are losing commission on deals that should have closed. Solicitors are losing fees. Surveyors are seeing fewer instructions. Removal companies are getting fewer bookings. The whole property ecosystem is feeling the freeze. And it ripples outward. Because property transactions drive spending. Appliances, home improvements. When people move, they spend. When they don't move, that money stays in savings accounts. The economy feels it. November 26th is going to be a reckoning. One way or another, Rachel Reeves will step up to that dispatch box and the speculation will end. Either she'll announce sweeping property tax changes and the market will have to absorb a massive shock. Prices will adjust. Behaviour will change. The assumptions people have made about property for decades will need to be rewritten. Or she'll announce limited changes and all this fear will have been for nothing. The market will breathe a collective sigh of relief. Buyers who waited will rush in. Sellers who held out will feel vindicated, and estate agents will have the busiest December in years as everyone tries to complete before Christmas. Or, and this is possible, she'll announce consultations, kicking the can down the road and extending the uncertainty even further. This might actually be the worst outcome, because at least with definitive changes, people can adapt. With more uncertainty, the freeze continues, maybe into the new year, maybe into the spring market, maybe until next autumn. Nobody knows. What we do know is that this frozen state can't last forever. Human beings need to buy and sell homes. Life events don't wait for budgets. People get divorced. People have babies and need more space. People get job offers in other cities. People retire and want to downsize. People inherit property and need to sell. These things happen regardless of what Rachel Reeves says in Parliament. The spring market will come regardless of what happens in November. And when it does, pent-up demand will either explode if the fears were overblown, or the market will reset to a new normal if the tax changes are real. Think about it this way. If the budget introduces prices will have to fall to compensate. A property that would have sold for $600,000 in a world without annual property tax might only fetch $550,000 in a world with it. Buyers will factor the ongoing tax cost into what they're willing to pay. Sellers will have to accept lower prices or not sell. The market will find equilibrium. It always does. But it might take 6 months. It might take a year. During that adjustment period, transaction volumes will stay low, and that's painful for everyone involved in property. If the budget introduces no changes or minimal changes, the release of tension will be instant. Every buyer who was waiting will suddenly have no reason to wait. Every seller who was holding out for a better price will have leverage again because demand is back. You could see a surge in activity in the short term, especially in London and the south where the freeze has been most severe. Supply is there, demand is there. It's just been suppressed. Remove the suppression and boom! The UK housing market has survived recessions, financial crises, pandemics, and countless government interventions. It survived the 1990s crash. It survived 2008. It survived Brexit uncertainty. It survived COVID lockdowns. It'll survive this too. But it might not look the same on the other side. The relationship between property ownership and taxation in this country could fundamentally shift. For generations, the deal was simple. You buy a home, you pay stamp duty once, you pay council tax annually. Your home appreciates tax-free. When you sell, gains tax on your main residence. That's been the framework. If that framework changes, millions of people will need to rethink their relationship with property. Is it still the safe investment it was? Is it still worth stretching yourself financially to get on the ladder? Is it still worth holding property for the long term? These aren't small questions. They're fundamental. The assumption that your home is your safest, most tax-efficient investment could be challenged. If you're facing annual property taxes and potential CGT on gains, suddenly property looks more like shares. Taxed going in, taxed going out, taxed while you hold. The advantage disappears. Why take on mortgage debt and all the hassles of home ownership if the tax treatment isn't favourable? Some people will still buy because they need somewhere to live, but the speculative element, the buy-to-let investors, the people treating property as their pension, they might look elsewhere. And that changes the market. That landlording is a reliable path to wealth could be tested. The golden age of buy-to-let is probably over anyway. Mortgage interest relief is restricted. Stamp duty is higher for second homes. Regulations are tighter. Evicting problem tenants is harder. And if NI gets added to rental income, the returns become mediocre. You could make better money in index funds without the hassle of tenants calling about broken boilers at midnight. So more landlords exit, fewer new ones enter. The professionalisation of the rental sector continues. Big corporate landlords with economies of scale take over. Build-to-rent developments multiply. The small private landlord becomes a relic of the past. Regional inequality could widen as the north and south diverge even further. If property taxes target homes over 500,000, that's a London and southeast problem barely notice. So investment flows north. Development happens there. Jobs follow. Young people move there. Meanwhile, the south gets stuck in high-cost, high-tax, low-growth purgatory. We could see a genuine rebalancing of the UK economy, not because of some grand government strategy, but because the tax system accidentally makes it happen. We're watching history happen in real time, even if it feels like nothing is happening at all. Because sometimes the most significant moments aren't loud and dramatic. Sometimes they're quiet and tense. A market holding its breath, waiting for a single day, a single announcement, a single decision that could change everything. This is one of those moments. Years from now, people will look back at October 2025 as the month the UK housing market held its breath. The month before everything changed, or the month when everyone panicked. Either way, it's a moment that matters. So here's what you need to know right now. If you're buying, you have more power than you've had in a decade, but fear is stopping you from using it. If you're selling, you're fighting against a tide of uncertainty that has nothing to do with your property. If you're a landlord, the rules you've played by for years might be about to change. And if you're just watching, trying to understand what's happening, you're witnessing one of the strangest moments in UK housing market history. A market with plenty of supply, decent mortgage rates, stable employment and economic growth that's modest but positive. A market that by all normal measures should be functioning. But it's not, because sometimes fear matters more than fundamentals, matters more than statistics, and sometimes a single date on the calendar can freeze an entire market worth trillions of pounds. November 26th, 2025. Market. Remember it, because the UK housing market will be different after that day than it was before. The only question is how different, and whether all this fear will have been justified or just another chapter in the long, strange story of British property obsession. Either way, one thing is certain. The freeze will end, the market will move, and when it does, they'd acted differently. The only question is whether you'll be one of them.